all. This is Swarnam, Assistant Professor of MBA Department of SNS College of Technology. Today we are going to discuss about the case study of JP Morgan Chase, and we are going to see about their investment strategy. Yes, we'll start with the introduction of this case. So, before getting into the case, a small introduction about the company. JP Morgan Chase is a multinational financial services company which has been well known for its banking, asset management and investment banking services. So, this case study it tells the overview about the company's core business and the role of the company in the financial sector. So, evolution of this company, the company has been established in New York in 1799. So, JP Morgan, it is a global financial giant with operations in more than 100 countries. So, this is a company which manages trillions of dollars in assets, and it also serves more than millions of customers, includes individuals, corporations, governments as well as the institutions. So, we will get into the case scenario. So, in this case study, we examine a hypothetical scenario in which JP Morgan Chase is been tasked with the managing of high net worth individual investment portfolio in order to achieve the long term growth while managing the risk. So, background of this case, the client. The age of the client is 45 years, he is an old entrepreneur and he is having a high net worth, and he is looking for a growth in his wealth for retirement and as well as for his future financial security. So, as a company, so how and what sort of investment strategy they are going to follow with this individual investor. So, he is a person of having a diversified investment portfolio objective with an asset value of totaling $5 million. So, we will see the methodology which has been followed by JP Morgan Chase in order to invest the particular individual assets in the various avenues. So, the first aspect which is being considered by the company is risk assessment. So, risk assessment is concerned what is the risk tolerance of an individual, and they will also inspect the financial goals of an individual and the investment plan, like what is the duration of his investment. So, when we tell about the risk assessment of an individual, it will not similar to all the type of investors. The risk assessment, it will change according to the individuals. Some person will have a high risk taking capacity, where the other person will not have that much of risk taking capacity. So, that is what we term it as a risk appetite. So, risk appetite, it will differ from individual to individual. Some people, that is youngsters, they will be ready to take higher risk. But in case of an old persons, eldermost person, their risk appetite level will be very less, and the risk capacity will also differs with the individual. Say age factors, income factors, all this will influence the risk capacity of an individual. So, all the type of people will not take same type of risk, and the risk tolerance will also differ based off the individual. So, first and foremost, if before you are going for an investment, you have to assess the risk you have to assess the risk of the investors. So, as a company, what JP Morgan Chase will do is, JP Morgan will assess the risk ability of an individual investors, and based on that only they will go for investing their amount in the various portfolio. So, after risk assessment, the second one is what called as an asset allocation. So, here the company, they have been recommending the following components, that is, the company has been recommending to invest in equities, even fixed income securities and alternative investment. That is, what sort of the strategy is been insisted by the company is we should not go for investing in only one type of asset the entire amount. So, here JP Morgan recommends the investor to go for investing their amount of 60% in the equity shares, and in case of a fixed income 30%, and the remaining 10% in the other securities like real estate or hedge funds, or in the any other private security investments, or whatever mode it might be. So, their asset allocation is 60% in equity, 30 in the fixed income securities, that is debentures or bonds, where they will get the stable income, and alternative investment can be considered up to 10%. So, this is what the recommendation which has been given by the company. And the other the main aspect about this company is JP Morgan Chase, they have a very good expert team with them, and this team of experts, they will be actively managing their clients portfolio, because the portfolio pattern, it will not remains constant. Based on the market condition, the portfolio revision will also occur, and there will be changes in the amount of investment, or there might be changes in the buying and selling of the securities. So, here the company suggests that they should always monitor the market conditions, daily monitoring of the market condition, and based on the opportunity and based on the risk factor, the portfolio revision will be done with the experts of the JP Morgan Chase. And the other factor which the company will consider before going for an investment is tax efficiency, that is, so in order to minimize the tax level of an individual, the company will also consider to invest in any tax saving schemes for an individual. So, regular review and rebalancing is very must, which has been highly emphasized in the company. So, the company client's portfolio has been reviewed on a periodically to see the status of their investment, and regular review and rebalancing will be done in the JP Morgan Chase. So, here when we tell about the methodology which has been followed by the company before investing, the one methodology is risk assessment. They will completely assess the risk of an risk taking capacity of an individual. After assessment of the risk, they will go for an asset allocation. So, the company have told the company have specified that not to invest in entire amount in the one type of security. So, they have been recommended this investor to go for investing in 60 equity and 30 in fixed income security, and remaining in the other securities. So, risk assessment, asset allocation, then comes the portfolio revision. Once the allocation has been done, we should also review the progress of the investment. We should keep monitoring the share price. As an effective portfolio manager, they will be involved in rebalancing of their investment pattern, and tax efficiency and regular review is very must. This is what the aspects which has been given more importance in the JP Morgan Chase for their investment strategy. And how then comes the evaluation. So, here as we have seen in the introduction of this case, 45 years entrepreneur, he wants to invest his 5 million of amount in a good security with and he also wanted to maximize his wealth after his retirement, right. So, that is for the next 20 years. So, that is what here the company insisted to have the investment plan on a year basis. So, 1 to 5 years, 6 to 10 years and 11 to 20 years. So, this is how the company has been categorized. So, in the year 1 to 5 they can go for investing the major portion in the equity because of some there will be some volatility, and when we tell about the year 6 to 10, the company portfolio maintains a balance between the risk and return. So, they can adjust their allocation to meet the individual objective. And 11 to 12, that is during the near to the period of his retirement, where all these investment will be shifted towards some conservative allocation, because this is a place where the individual will not be having a much ability to take risk. So, initially as we have told 1 to 5 years they can go for investing in more in shares, and they can go for aiming more profit, all those aspects. But when we come about the later on period, that is nearing to the retirement age, so there they have to gradually shift their portfolio to conservative allocation, so that the risk will be reduced and they can also protect their wealth. So, at the end result, by the end of the 20 years, as per the assessment and as per the evaluation plan of the JP Morgan Chase, the investor has grown his wealth, and he has also been very well planned for his retirement. So, conclusion, this case study illustrates about the investment strategies of JP Morgan Chase. Here they have been matched the risk tolerance level of an individual, and also they have been assessed the financial objective of the individual. So, based on that they have been went for investing in various mode, and how we have also seen how they have been assessed and how they have been evaluated, and finally what is the end result. So, based on these clear plan about the investment, based on the experts and experts advice, based on the portfolio revision, and based on the review of the progress, and based on rebalancing. So, all these aspects, it helps the individual to earn return on his investment, and also made him to plan after his retirement. Thank you.